Okay, welcome. Good evening, everyone. Thank you for joining us. As usual, welcome to Future Proof. And tonight we have our very special guest, Dino. Thanks for joining us, Dino.
Hey, Andrew.
Hey. Okay, so welcome, everyone. Today is Thursday, 10th of June, 2021. Hope everyone's staying safe. Okay, so just doing a mic test. If you can hear us loud and clear, give us a thumbs up. Dino, do you want to do a sound check?
Testing, 1, 2, 3.
Okay, so if you can hear both Dino and myself loud and clear, please just give us a thumbs up. Thank you. Okay, now look, as usual, if you're joining us on Facebook or YouTube or on Twitch, do follow us, give us a like, subscribe. And if you're on YouTube, click on the bell icon and choose all. Now, some news about YouTube. So, I some of you who joined us for not last week's session, but the two sessions before that, obviously, if you were on YouTube, we were cut off midstream both weeks, and there was probably some glitch with the algorithm on YouTube. So we followed up, and I followed up and followed up and followed up, and so we got that one sorted out. So there's no strike. Okay, tag your friends, tag your family if you think they might be interested in tonight's topic. It's always interesting when we have Dino on, because Dino, he just brings so much insight. And so last week we had some very interesting guests. We had this company called Hedge. It's a startup called Hedge, and it was about DCAing, doing a dollar cost average of crypto into your portfolio, and basically you get paid your wages or your salary every month, and a portion of it can go directly into crypto. And so we had the whole team almost on. So there were 5 guests that came on. The most, the notable ones were one of the founders, actually 2 co-founders were on. We had David Schwartz. He's the CEO. He's also the project director on the Litecoin Foundation, and Paul Bradley, the other co-founder. And then the other notable one was we had Danielle Monet. She was an ex-WWE wrestler, also known as Summer Rae. Yeah, so she was on as well.
Really interesting.
Yeah. Then we had the rest of the team. So okay, look, if you're just joining us, thank you for joining us. Welcome. Good evening. And we have Dino from Santiment. I'll pass it over to Dino to introduce himself in a few minutes. And let's see if there are any other announcements. No other announcements. It's been a pretty interesting week since last week. It's been there was the Bitcoin conference, then there was El Salvador. And just to catch everyone up on what happened, so the Bitcoin conference was 3 days: Friday, Saturday, Sunday, and that was a lot of who's who in Bitcoin was there. Even the CEO of a publicly listed company, Michael Saylor, was there. So that was interesting, and a lot of there were a lot of insights. But we won't cover what the topics of what went down. And then at the Bitcoin conference, there was an announcement that El Salvador, a country in Central America, they were going to vote to have Bitcoin as legal tender. And so the vote went down. In Malaysia, it was about 2 p.m. Yesterday. And so the vote got passed by a major majority. And so so now Bitcoin now it goes into the implementation of Bitcoin being legal tender, and I've seen a lot of tweets and a lot on social media, and also which Dino will talk about how that has affected the price as well. And so it's just been It has pumped it. It's up what, 10%? It's about 38.
Almost 13% over the last 36 hours. Yeah.
Yeah, so that's really cool. And so and it was interesting because I was actually on a Twitter Spaces call yesterday, and the El Presidente was actually on the call as well while while the vote was going down, and then he had to excuse
Interesting.
himself. He had to excuse himself, and then someone else took over for him. And as the votes were being counted, we were getting live commentary, and then you could hear the applause like from the floor. So that was that. It was like you were there. It was pretty exciting. Then of course the El Presidente tweeted how he had started looking into geothermal energy. So
Yes, volcanic energy in
yeah,
particular.
volcano for Bitcoin mining, and so that's another new one. So
why not, man? Why not? At this
why
point,
not?
anything that's going to pump the price, it's going to be, it's going to be touted as revolutionary technology. So now we're powered by volcanoes, I guess.
Yeah. And so so a lot of social media posts on that. And okay, so without further ado, I'm gonna hand it over to Dino from Santiment. Again, sorry, just before I hand it over, just wanted to say that look, anything that we discussed tonight is not financial advice. And should not be taken as so, right? We are not financial advisors. If you are gonna make an investment decision, go consult with your financial advisor. Okay, Dino, over to you.
Thanks, Andrew. So yeah, like Andrew said, my name is Dino. For those of you that have not seen me before on these shows, I am one of the market analysts at Santiment. Santiment is a all-in-one website for token intelligence. So essentially what we do is we collect data from a bunch of different sources of information, including data directly from the blockchain, data from social media, over 1,000 different social media channels related to cryptocurrencies, as well as data pertaining to the development activity of different projects. So we scrape thousands of GitHub repositories to make sure that we track the overall amount of resources that are expended on developing different cryptocurrency projects and how that kind of correlates with the price of those projects as well, or their native tokens. So yeah, today we're going to talk a little bit about what Bitcoin's and Ethereum's metrics have been looking like over the past week or so. There's been a lot of talk whether this might be the end of the bull cycle or not. There are a few metrics that I'm going to mention that seem to be sort of on a longer scale a bit concerning for Bitcoin, but it's not all bad news. It's kind of split along the middle. So I'll just kind of show over a bunch of different metrics that we have. By the way, one note, I do have some handymen that are supposed to come at some point, so I might be having to excuse myself to open the door for them during the call. I'm not sure when they're arriving, but
no worries.
Yeah,
no worries. That's cool.
Just so you guys know. All right, cool. So let me share my screen. Okay, cool. So this is, can you see my screen, Andrew?
Not yet.
Okay. Oh, yeah, that's right, because I have not allowed it yet. Okay.
New laptop?
Now you should be able to see it.
Oh, sorry. Yeah, there you
go. Okay, cool. So,
fantastic.
Yeah, this is what the price of Bitcoin looks like now. It's up about 9% in the last 24 hours and about 13% in the last 36. Obviously, in line with the El Salvador announcement. And in fact, one of the so like I said, the three main sources of information that we sort of capture at Santiment are data directly from the blockchain, data from different GitHub repositories, and data from crypto social media. So what I'm going to show now is one of our tools that we've built using this data from crypto social media. Essentially, what we do is we, on a daily basis, track around 1,500 different cryptocurrency related social media channels. So this includes Telegram groups, Discord servers, crypto subreddits, official Twitter accounts. It's basically the biggest repository of social information around cryptocurrencies as far as we're aware. And using this data, we've developed a bunch of different metrics, some very interesting, some that seem to have some alpha as far as their sort of correlation with the prices of different cryptocurrencies. One of the cool products or tools that we've developed using this data is something we call social trends. It's a dynamic list that gets updated every hour, and it is a list of the top 10 words that are gaining the most mentions on these crypto social media channels relative to their previous 2-week average. So what we're trying to accomplish here is we're trying to find developing topics on crypto social media before they really become mainstream, sort of as they're emerging, right? And as you can see, I mean, this is what the top 4 words on cryptocurrency social media at the moment look like. So Salvador, volcano, Bitcoin, and BTC in country is Salvador. Then we got Warren at number 6. This is because Elizabeth Warren, a U.S. congressman, has said that something Bitcoin is bad for the environment and therefore should be banned. I'm not sure exactly how she plans to ban Bitcoin, but you know, it's the Americans. They think they can ban anything. So anyway, this is what the list of words, the most popular words of crypto social media looks like today. So obviously there's quite a bit of hype around this Salvador news. It's you know, helped Bitcoin recover back to this 37, 38K range. But to be honest, it's been kind of stuck in that 33 to 37K range for about 2 weeks now. So there's quite a few resistance points up ahead for Bitcoin before anybody can really consider this a bullish outbreak. However, I am going to show what a few other social metrics that seem to suggest that there's quite a bit of hype around Bitcoin over the last couple of days. So the first metric that I'm going to show is social volume. So social volume for Bitcoin or for any coin on our platform shows the amount of mentions. And by the way, we collect about 100,000 new messages from social media on a daily basis. So there's quite a lot of data to sort of process and parse, right? So social volume shows the total amount of mentions of a particular coin on all of these crypto social media channels. As you can see, there's been quite a lot of discussion around Bitcoin as the price started to correct. First of all, this was a spike when Elon Musk said that, you know, Tesla will no longer accept Bitcoin payments. And then we've had a couple of relatively large upticks in Bitcoin social volume as China decided to crack down on cryptocurrencies. So we've had a sort of a period of you know, relatively low or declining social volume for Bitcoin, suggesting that the crowd has kind of become accustomed to these levels between 32 and 35K. Over the last couple of days, obviously, because of the Bitcoin conference and because of the El Salvador news, we are once again seeing an uptick in Bitcoin-related mentions. Now, what does that mean for Bitcoin? Or in other words, are these mentions positive or negative in nature? And how has that kind of changed over the last couple of weeks? To figure that out, we've built an additional metric because this particular metric that we're looking at right now, social volume, only tells you whether there are, you know, larger or smaller number of mentions of a particular coin. What they're not telling you is what the average mood of those mentions is, whether the mood is bullish or bearish, and how in general that sentiment of the crowd is kind of coincided with the Bitcoin's price action overall. So last year, we've developed another metric on top of this data that we call weighted crowd sentiment, which is essentially what we do is we use all of these daily mentions of Bitcoin that we collect on crypto social media, and we parse it through a machine learning algorithm that parses all of these messages as either positive, negative, or labels them as either positive, negative, or ambivalent. And the result is a chart that I'm going to show you right now. It is called weighted social sentiment, and the idea of the chart is to visualize the average mood of the crowd towards a particular coin on crypto social media, right? So these sort of major upticks in the positive territory suggest the periods where Bitcoin-related sentiment was very high or bullish. And then on the other hand, these declines in social sentiment suggest the period in time when Bitcoin-related sentiment was fairly bearish. So over the last couple of, well, actually 36 hours, I guess you could say, we have seen once again a fairly significant spike in bullish sentiment towards Bitcoin. So overall, the El Salvador news has definitely popped up in our data as a pretty sort of optimistic or hopeful sign for a lot of Bitcoin you know, observers and Bitcoin analysts or whatever. Now, whether that's good or not for Bitcoin is a different question. The reason why I say this is that we've done some back tests on the relationship between the sentiment or the average mood of mentions towards a coin on crypto social media and the price of that coin. And in our backtest, what we usually found is that extremely bullish sentiment is rarely a positive sign or is really a bullish sign for cryptocurrencies. In fact, extremely bullish sentiment typically seems to coincide with a local price stops, and it sort of includes a risk, a higher risk of a short-term correction, whereas relatively bearish sentiment sort of assumes or implies that the crowd is kind of undervaluing the coin and maybe overselling the coin at that point in time, allowing for its price to more sustainably recover from that point on. And actually, if you can look at this chart over the last 2 years, we do see periods of either price stops and ensuing corrections or just price consolidation for Bitcoin coincide with large or sort of extremely bullish sentiment. So this was at the time the 2019 high for BTC in June and July. Both of those have coincided with very positive sentiment towards Bitcoin before we eventually went down, right, and had essentially what was a 6-month period of a price consolidation and eventually a correction for BTC. And then as Bitcoin broke 11K here, I believe, no, actually here it broke 11K. This is the first time that it broke 9K after the coronavirus crash. And this was also the period where Bitcoin's May halvening was supposed to happen and did happen. We saw another sort of major uptick in Bitcoin social sentiment, which coincided with another period of just flatness as far as its price action is concerned. Once Bitcoin broke 11K again, we had another period of large or bullish sentiment towards BTC, which coincided with another 1.5-month period of just nothingness, a very sort of a flat price action for BTC. And it wasn't in each of these periods or in time, it wasn't until we went very deep into negative sentiment towards Bitcoin here, for example, that we were able to recover once again. And even as Bitcoin started to really break out, we have seen it several times actually drop into the negative territory once again before we saw another bullish breakout. And more recently, if I zoom in, what you're going to see, especially in the past couple of months, actually, So this was the sort of very high spike in bullish sentiment towards Bitcoin at its all-time high. Actually, quite a few of its local tops and at the time all-time highs were marked by spikes in bullish sentiment here, 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 and then eventually here. So once Elon Musk tweeted about Bitcoin, what's interesting is that this is the moment that it tweeted that Tesla will no longer accept Bitcoin payments. What's interesting is that, at least according to our data, a lot of the crowd thought that wasn't actually that bad of a news for Bitcoin, and that yes, it sort of corrected by about I think 15%, but that since it was not an sort of an organic dump, right? It was more of a news-related dump. A lot of people were screaming to buy the dip. This is just a sort of a small detour, and we're about to break 60 and 70K once again. So at the time that Elon sort of tweeted about it, the crowd was still very bullish on the Bitcoin, and they thought that, oh, thank you, Elon, for letting me get into crypto once again at a discount, essentially. However, as China news came, and as China news first of all, as China announced that they're going to crack down on general sort of illicit or illegal activities towards cryptocurrencies, and then as it also announced that it is going to be cracking down on Bitcoin mining, we have seen Bitcoin-related sentiment move back into negative territory, where it was for basically the entirety of June so far, until the last couple of days. First of all, we've seen a sort of a slight uptick in Bitcoin-related sentiment as the conference began, and then finally, over the last 24 to 38 hours, there's been another relatively strong uptick in Bitcoin-related sentiment. Now, as I said, I didn't include the last moment in Bitcoin sentiment here. So, like I said, generally speaking, at least in the past, obviously, historical performance is not indicative of future results, and it's not a perfect science in any case. But in the past, we have seen Bitcoin-related sentiment, especially positive Bitcoin-related sentiment, not be a great omen for its price, whereas overall relatively low or bearish sentiment has sort of indicated that the crowd was nowhere near euphoria, and that it was actually fairly concerned about future price performance of Bitcoin, and that has been sometimes an opportune time to accumulate, right? So at least for me, it is slightly positive that we have seen Bitcoin sentiment immediately sort of drop back into negative territory after the El Salvador news. So there was sort of initial spike in the amount of hype and general euphoria towards news. But as Bitcoin sort of continues to be stuck in this trading range around 35 to 37K, shortly thereafter, or in the last like 12 hours or so, we have seen it move back into the negative territory. And in fact, if you look at a lot of different top caps, you will notice that most of them are still very much, or the crowd is still very much bearish towards the general price performance of most top caps overall. So here we're looking at Ethereum. Let me zoom in a bit. As you can see, actually, let's do the last year of data. Right. So as you can see, Ethereum currently is almost at its lowest level as far as average sentiment towards Ethereum is concerned since the start of the rally. I think I've been looking at Ripple recently, and it showed a similar picture. Let me see. Yeah, same thing. Let's zoom in a little bit so you can see it. There we go. So we've seen Ripple's social sentiment or relative sentiment towards Ripple as well sort of decline over the last couple of weeks, even a month or so. And one of the sort of new guys on the market, well, not really new, but the most recently touted Ethereum killer in Polkadot, I believe that it's social sentiment. Yeah. So after let me zoom in a bit. Following the price uptick here, which coincided with quite bullish sentiment, as is usually the case, we have seen it move down once again back into the negative or bearish territory. So overall, for a lot of top cap digital assets, over the last 2 to 3 weeks, essentially since the May 23rd bottom, we have seen a sort of market-wide FUD, or fear, uncertainty, and doubt. In general, like I said, based on several backtests that we've done on this data, in general, it seems that an extremely bearish sentiment is usually better for cryptocurrencies than extremely bullish sentiment. Essentially, what extremely bearish sentiment suggests is blood on the streets, or a lot of people being, their decision making being dominated by fear. Signs of capitulation starting to show up in the market, and as such, it could be the case that they are starting to undervalue the coin. So this is, I think, as long as these levels are quite low, I think, while obviously it's just one side of the market, it's somewhat optimistic to know that the market is not really optimistic about the market, as weird or counterintuitive as that sounds, right? So that's going to be as far as social data is concerned. Now, Andrew, before I move into some on-chain metrics that are a little bit more concerning for Bitcoin, anything that you want me to add, or any questions about social data?
No, I think that was pretty good, and it was a good explanation on what it means, and when it's when the social data is bullish, what that indicates, and when it's bearish, what that indicates. So no, I think that was pretty good. I think we can continue. Yeah. And
cool.
when the workmen come, just let us know. We'll just
yeah, I will. Hopefully he'll come in about an hour or so after we're done. But yeah. Now, as far as on-chain data is concerned, I wrote an article I think it was Saturday, so a couple of days ago. It's still fairly fresh. You can find it on insights.santiment.net. This is where we publish articles every day on the market. Somebody from the Santiment team will cover an interesting topic. I think today we're actually talking about Shiba Inu, or writing about Shiba Inu, the sort of meme coin that was supposed to overthrow Doge, and what happened with it, because now it's the worst performing Ethereum-based coin over the last 7 days, and just showing from a data perspective sort of the life cycle of a hype coin, right? The social mentions, how they soared, and what happened to it afterwards, both in terms of social and on-chain activity. It's quite interesting, and you might want to read into it. On Saturday, though, so basically 5 days ago, I wrote about some of the yellow flags that are starting to show in Bitcoin's on-chain data. So if you want a very sort of deep dive into where Bitcoin is according to on-chain and social metrics, this is a great way to start. I will, however, now show a few of the metrics that I've mentioned in that document. The first one is actually quite straightforward, and it's just active addresses. So this is a metric that a lot of people seem to be paying attention to more and more. Active addresses points to the amount of unique addresses that are interacting with Bitcoin on a daily basis. By interacting, I simply mean that are sending or receiving Bitcoin on a daily basis. So buying or selling, presumably, right? So overall, on the whole at least, sustained price rallies usually require a strong or a coinciding uptick in the amount of daily active addresses, simply because a lot of people or a lot of analysts use daily active addresses as a proxy for the amount of demand and in interest in a particular coin. Like, for example, if you look at Bitcoin over the last 2 years, yeah, what you're going to see is that essentially, especially since the coronavirus crash here, we had basically a year-long period of an uptick in its daily active addresses, suggesting that, and it's quite a organic or a sustainable sort of ongoing incline in the amount of daily active addresses. It wasn't like a sharp uptick, which would suggest that it's not as organic as possible. It was quite sort of spontaneous, and it happened over time. And this is usually what you want to see as far as the coin that you might want to invest in. In general, the higher the on-chain activity is over time, especially because you want to make sure that it's not simply an outlier. The more it suggests that the network effect is taking place, more and more people are interacting with it, more and more addresses are being created, and new blood is pouring into the market, right? So I wrote last week about some concerning signals as far as Bitcoin's on-chain activity is concerned, especially over the last 2 to 3 weeks. So let me zoom in again, just so you can see it. So I have this in my mind. I have made this sort of threshold for Bitcoin's on-chain activity or Bitcoin's active addresses at 1 million. So it's essentially here. And I can, in fact, draw a line here so you can see it. There we go. So this line shows 1 million daily active addresses for Bitcoin. So one of the sort of concerning signals that we've seen as far as Bitcoin's on-chain activity is that since the start of the year and until I think it was May 15th, yeah, right here. So between January 1st, right here, and May 15th, right here, there were only 9 days where Bitcoin's daily active addresses, or the amount of addresses interacting with Bitcoin, have been less than 1 million. So just 9 days, basically a week and a half since the start of the rally. Now, since then, or between May 15th and May 30th, and actually between May 15th and Saturday that I wrote about it, 17 out of 20 days, or 18 out of 20 days, were below 1 million in daily active addresses, suggesting that overall, the amount of interest in Bitcoin's, in Bitcoin in general, as far as on-chain data is concerned, is declining. And we have in fact seen, let me delete this line, we have in fact seen here over the weekend, usually on-chain activity and daily active addresses dip a bit over the weekend. That's not too concerning. Actually, the reason why I see all of these sort of ups and downs is because usually these are the weekend dumps, and you can kind of see that has a cyclical pattern. It's basically every 7 days you see a slight decline in on-chain activity. However, this was a very significant decline. Over the weekend, the amount of unique addresses that are interacting with Ethereum fell all the way down to the lowest was 715,000. So that was the lowest since, let me see. It was the lowest since here, October 19th. So basically the lowest amount of unique addresses interacting with Ethereum since essentially these very started or the beginning of the rally, right? Suggesting that overall we are seeing less and less general demand and interest in the top cryptocurrencies. And by the way, this is not limited to Bitcoin. So we've done some calculations to visualize what the on-chain activity, not just of Bitcoin, but of other top cap coins as well as general Ethereum-based coins is looking like over the last 6 months. So here, what we're looking at is we're looking at daily active addresses for Bitcoin, for Ethereum, for Ripple, Litecoin, and all ERC20 coins. Now, I have another chart that only shows ERC20 coins because its daily activity is still quite low relative to these other coins. But first of all, what we can see obviously is that Bitcoin's daily active addresses have dropped fairly significantly over the last 3 weeks. It's the same thing with Ethereum as well. Litecoin's daily active addresses have dropped a little bit, although not as significantly as these two. But in general, the on-chain activity of the top cap coins has started to diminish a little bit. And then if we look at only ERC20 coins, let me find that chart. Yeah, there we go. So this is a chart that shows only the average daily active addresses of all Ethereum-based coins with more than $100 million in market cap. So as you can see, since the start of the year, this was January, we've seen a slow but steady uptick, and then over the last month, once again, definite diminishing or decline, ongoing decline in the general amount of activity on these networks. So it's not all, it's not a complete sort of disaster, but it's definitely a metric that I think in the next couple of weeks is going to determine where the market goes. If we continue to see this ongoing decline in the on-chain activity for both Bitcoin, Ethereum, and the rest of the market, what that's going to suggest is that more and more people are sort of moving away and staying on the sidelines until the market recovers, and more people are in fact done with the market for the time being. There's not going to be enough new blood, enough new inflow of new funds in order to support a sustained rally. Over the last couple of days, we have seen with the El Salvador news, we have seen Bitcoin's active addresses move back to 1 million shortly. Today, once again, it's kind of starting to be a bit lethargic. So at the very least, I would say keep an eye on this chart. Keep an eye on not just active addresses for Bitcoin, but other coins as well. If you look at Ethereum, it's the same thing. So since its May all-time high, where Ethereum's on-chain active addresses were at about 800,000. Its active addresses have dipped all the way to less than 500,000 at present time. So that's what, about a 30% drop just in the last month. Not great. Obviously, this sort of this was, I think, an all-time high in Ethereum's active addresses, and it makes sense that this is probably an unsustainable level, and it's mostly because of its price action. But this type of a decline is certainly concerning in the short term and possibly in the midterm. So this is the first sort of metric.
Hey,
that,
Dino.
Yeah, go ahead, Andrew.
So would this for the audience? So would this indicate that most of so instead of sort of sending their coins back and forth between centralized exchanges, would this indicate that they're just hodling? Like they're not moving their coins, they're just hodling. Is that the interpretation?
Yeah, so it would suggest that not just moving between exchanges, but also just generally, especially for Ethereum, right? Ethereum compared to Bitcoin is not as it's obviously also a speculative asset, but it has a bunch of different use cases. And so the fact that Ethereum's active addresses overall are declining are suggesting that not only is this amount of speculative interest in the coin declining, but the amount of utility that we're seeing being sort of created on the Ethereum blockchain on a daily basis is also declining. Now, the reason why I find that particularly interesting, and maybe even because of that particularly concerning, is because Ethereum fees have been very low over the last couple of days. We have this metric that tracks the average fees on Ethereum, and I'm going to show you exactly how low they are. Let's look at the last year. So the average fee to interact with Ethereum at the moment is $3.50. It hasn't been that low since December. So
wow.
Yeah, overall, the amount of sort of demand that I would expect from Ethereum and Ethereum-based coins, the demand for them should be up, because the barrier to entry to interact with these coins is so low at the moment, at least compared to pretty much any point in time throughout the last 6 months. There are a number of different reasons why people believe that fees are so low. Number one is because layer 2 solutions like Polygon are definitely sort of rising in notoriety, and a lot of people seem to be, and a lot of addresses seem to be using layer 2 solutions more and more. But also what I've seen on social media is that a lot of people believe that the reason that the fees are so low is because market is in fear and they're not moving their coins anymore, and they're generally sort of staying out of the market for the time being. We have seen, and I think maybe I've talked about it last time, we have seen a lot of sort of signs of capitulation towards Bitcoin and Ethereum around the May 23rd crash. So, since then, I think a lot of people sort of retreated back and have decided to stay on the sidelines for the time being. So overall, it's quite interesting to me that even despite the fact that it is now currently the cheapest time in the last 6 months to interact with Ethereum, there is at the moment the lowest amount of users or addresses interacting with Ethereum in almost a month. So take that for what you will, but it definitely seems to suggest that the amount of interest or demand for these coins has been declining over the last month or so. So usually when you see these sort of drop-offs, it suggests that there's not probably going to be enough fundamental support to provide or to push price sustainably, into another sort of rally, into another strong bounce back. So what I would suggest to look for if you're sort of a bull in this market is to look for signs of increased activity, not just for Bitcoin, but across the board. Ethereum and popular ERC20 coins, Litecoin, Ripple. What we want to see is the sort of restart and renewed activity among all of these networks, and that would suggest people are now finally starting to believe once again that the network has value, and that we're probably done with the dumpage so far, or for now. So this is one thing that we've seen that is fairly concerning. The other thing that actually your question ties me perfectly into it, Andrew, is mean dollar invested age. So this is a metric. It's a bit complicated, but it's it shows some very striking patterns for Bitcoin over the last 6 or 7 years. Mean dollar invested age is a metric that we at Santiment have developed. The first metric that we've developed was mean coin age, but the two are very similar. And I've talked about it, or I've written about it here very in depth. Actually, maybe it's better that I show you guys here. One sec. Right. So mean dollar invested age is a metric that computes the average age of all coins that live on the blockchain, so basically all units of Bitcoin, let's say, and weighs them by the moment in time that they were purchased, or moment in time that they were last moved on the blockchain, which we assume was its purchase price. So what mean dollar invested age essentially means, I'll show you here, actually, is that the rising slopes in mean dollar invested age, like here, let me put the last 6 years, 7 years here. The rising slopes in mean dollar invested age here suggest a period of time where, on average, the coins on the Bitcoin network are not moving. On average, obviously, there's some on-chain activity, but on average, there's a sort of, the coins on the network are becoming increasingly old. They are staying in their respective wallets, suggesting a period of dormancy and hodling. And then on the other hand, these sort of major drop-offs in Bitcoin's mean dollar invested age suggest a period of redistribution from one sort of stakeholder in Bitcoin's network to others. Like, for example, here I think it was the first sort of cycle where funds were redistributed from early Bitcoin investors into the mainstream community that has realized that Bitcoin might have some value as it started to really capture the attention of mainstream investors. And so what's interesting about mean dollar invested age and its sort of interaction with the price, and actually let me move even a bit back. Yeah, there we go. This was the first time that we saw this decline in Bitcoin's mean dollar invested age. So what's interesting about this metric is that at least so far, each of Bitcoin's bull cycles have coincided with a significant drop in its mean dollar invested age, suggesting sort of a beginning of redistribution. And then on the other hand, at sort of the lowest level of Bitcoin's mean dollar invested age, or the sort of the bottom of the valley, once we start seeing a move back into the hodling, or sort of once we see a signal of the end of a redistribution cycle, in the past, this sort of signal has implied a end of a bull cycle and the beginning of a price correction for BTC. So this is what at least happened in 2017. So this point in time, when we've went from a declining mean dollar invested age slope into an increasing mean dollar invested age slope, this was a signal that redistribution of Bitcoin was over. People are sort of, everybody that's wanted to buy and sell have sort of done so, and we're now moving into another sort of hodling period, which has coincided with a period of price correction. We've seen the same thing in 2019. As Bitcoin's mean dollar invested age started to grow, we've seen a converse price action, and we've seen the same thing even here in 2013. The first time that Bitcoin, I believe, broke 1K, we've seen its mean dollar invested age start to increase once again, and Bitcoin's price diminish over time. So over the last month, and now I'm going to zoom in so you can see what Bitcoin's mean dollar invested age has been looking like over the last 3 months. So over the last 3 months, this is what Bitcoin's mean dollar invested age has been looking like. So it's certainly apparent that in the last 30 days, the average sort of slope or angle of Bitcoin's mean dollar invested age has been up, suggesting that overall the period of redistribution, basically ever since the bottom here, but even before that a little bit, the period of redistribution might be over for this cycle. And zooming back out, previously or historically, that has indicated a tail end of a bull cycle. Now, obviously, this doesn't necessarily need to mean that this is the end of a bull cycle. I think we've seen several times as well where Bitcoin's mean dollar invested age has started to slope a little bit, but then we had another sort of drop off here. But it's something to be mindful of, at the very least, is that this is one of the sort of the longest sort of indicators, one of the most long-term indicators that we have on our platform. And in the last 30 days, it has really started to flash concerning signs for Bitcoin's long-term or sort of mid-term longevity and the longevity of its rally. So, it's what it is. It's, can't really fake data here. So that's another concerning signal that we're seeing for Bitcoin, right? So these are the two metrics that really are in the forefront of my mind at the moment when we're talking about whether this is the end of the rally or not. There are definitely, a lot of people that believe we might, recover to up to 50K from here, especially with this El Salvador news. But as far as on-chain activity is concerned, there is a clear and somewhat concerning decline in the daily active addresses or general on-chain activity towards not just Bitcoin, but across the board for sort of top cryptocurrencies and digital assets. And then overall, we are seeing, according to our data, the end or the possible end of a cycle of redistribution for Bitcoin, reallocation of funds, and pivot back into hodling, which has previously sort of indicated the tail end of the bullish cycle. So that's as far as some not so great news for BTC according to our data. Now, it's worth making sure, or it's worth noting that in the short term, we might still see Bitcoin start to recover from these levels. I don't know how much time we have. Okay, we have a bit. I don't know, Andrew, if it's if I can show MVRV as well to kind of showcase. Sure. Okay.
Yes, please.
So I also wanted to show on the short term that it's not all bad news for Bitcoin. Some of the short-term metrics are showing signs of possible recovery. So one thing that I wanted to show is, first, before showing MVRV, I wanted to show network profit loss. This is another metric that we've developed at Santiment. The idea behind this metric, by the way, is to try to visualize the daily ROI of all transactions on the Bitcoin blockchain or any blockchain. We have this information for Bitcoin, Ripple, Ethereum, and all the ERC20 coins. So the way that we calculate this metric, which we call network realized profit or loss, is for each unit of Bitcoin that moves on the blockchain. Let's say there was a unit of Bitcoin that moved here, for example, around its all-time high, right? So we take the price at which a unit of Bitcoin has moved here, and then we take the price at which that same unit of Bitcoin, first of all, we assume that this was its acquisition price or buy price, right? And then the next time this unit of Bitcoin moves on the blockchain, let's say it moved here, we take the price at which it was then moved on the blockchain, and we assume that this was its sell price. So the difference between those two prices, we calculate for all units of Bitcoin that move on the blockchain daily, and it becomes this chart. So essentially, when you see these massive spikes in Bitcoin's network profit loss, what that points to is that on average, at this point in time, all Bitcoin, units of Bitcoin that are moving on the blockchain are moving at a significant profit relative to the last time they moved on the blockchain, suggesting elevated profit taking, right? And then on the other hand, when we see these major drops in Bitcoin's net to profit loss, what it suggests is that all units of Bitcoin on average that are moving at this point in time are moving at a significant loss relative to the last time they moved on the blockchain. And as such, it usually indicates these, especially these massive drop-offs like we've seen here, it indicates a period of capitulation, a period where people are selling their bags at a loss. Because this is such a big drop in Bitcoin's net to profit loss, it probably indicates that a lot of holders that have acquired it the last couple of months at these high levels are now selling their bags at a loss because they fear further downtrends. And we have seen, not just for Bitcoin, but for a lot of altcoins as well in the past, that these major drop-offs in net to profit loss, these capitulation drops, tend to indicate local bottoms or periods of price recovery. We've seen it even here as well. Obviously not as dramatic as this one, but I don't think there was ever as big of a spike or drop in Bitcoin's net to profit loss as we've seen on May 23rd. So if I look at the last 6 years, or actually, sorry, 7 years of data. There we go. So this was the sort of biggest capitulation event in Bitcoin's history that we've seen here at the end of May. Very, very large drop in Bitcoin's net to profit loss. And look at the previous drop-offs in Bitcoin's net to profit loss. This was the coronavirus crash, which once again showed a period, maybe a 36-hour period of wholesale capitulation, network-wide capitulation, people selling their coins at a massive loss because they were fearing further corrections for BTC. As such, it was also earmarked a period of price recovery for the top coins. So if I zoom back in now and move this net to profit loss into a shorter time interval, let's say 4 hours. Yeah, that will work. So if I zoom back in, first of all, we've seen this sort of the biggest capitulation event in Bitcoin's history here. And we've also seen another sort of big capitulation event right before this bounce back, right at another bottom here for BTC 2 days ago. So in general, we are still seeing, Bitcoin holders selling at a loss. We are seeing signs of capitulation and panic selling among some BTC holders and investors. And usually, like I said, while it's obviously not 100% and there's no metric that's a silver bullet or whatever, we have seen these drop-offs, not just for Bitcoin, but Ethereum and other coins as well, in the past indicate capitulation and as such, possibly a period of short-term price recovery for BTC. So far, that seems to be the case, obviously helped by these news of El Salvador accepted Bitcoin as legal tender. So that's one thing, is that we're still seeing, periods in time where Bitcoin holders are very much scared and, fearful of another correction, and buying when there's blood in the streets can sometimes be an opportune strategy. So that's number one. And then number two is Bitcoin's MVRV ratio. So MVRV ratio is a metric that we talk about very often on our weekly streams. We have a live stream every Friday at 4 p.m. Central Eastern Time on our YouTube channel, where we kind of cover the entire market as far as what has been happening over the last week. And we always talk about MVRV ratio because it's a very popular on-chain metric. The idea behind this metric is that it tries to visualize the average profit or the average loss of all addresses that have acquired Bitcoin within a certain time frame. So the 30-day MVRV ratio that we're looking at right now shows the average profit or the average loss of all addresses that have acquired Bitcoin only in the previous 30 days. So, for example, right now we are seeing the 30-day MVRV ratio hover at around minus 3.9%. So minus 3.9% MVRV means that on average, all addresses that have acquired Bitcoin in the previous 30 days are minus 3.9% on their initial investment. Obviously, this is only using on-chain data, so there are some assumptions there based on when the last time when these Bitcoins moved the last time, and assuming that those movements on the blockchain are buys and sells. But at the very least, it's sort of a nice overview or a nice sort of gauge of the general sentiment of Bitcoin holders. So currently, it's short-term holders, even with this 13% uptick over the last 36 hours, its short-term holders are still underwater on average, about minus 4% of their initial investment. So the way that on-chain analysts use this metric is the higher the MVRV, Let me zoom out a bit. The higher the MVRV, let's say here was almost 45%, meaning that short-term holders were about plus 45% of their initial investment. The higher the MVRV, the greater the unclaimed profits or unrealized profits, and as such, there's an increased risk that these holders are going to start claiming these profits, realizing their gains, and apply sell-side pressure and negative price pressure on the cryptocurrency in question. So the higher the MVRV is, the more overvalued the asset is at the moment, and then the lower the MVRV is, the more opportune time it might be to accumulate. So if you look at Bitcoin's MVRV over the last couple of years, let's say 4 years here. Actually, 4 hours is too low. Let's say 1 day. Okay, I think this can work. Let me just also move the price into a 1 day interval. Okay, there we go. So what we're seeing here, as far as Bitcoin's 30-day MVRV is concerned, is we're seeing sort of what its historical lows have been. And there have been a few outliers, like the early February of 2018, where Bitcoin's 30-day MVRV was as low as minus 28%. And there has been another outlier where Bitcoin's MVRV was minus 39% during the coronavirus crash. But first of all, both of these were massive outliers. And second of all, as you can see, they were very unsustainable. In general, they only lasted for a couple of days, maybe 24 to 48 hours before its MVRV started to normalize, suggesting that we were vastly undervalued. And as such, that historically, these levels of low MVRV are probably unsustainable, and we are going to see short-term recovery. So in the past, Bitcoin's short-term or 30-day MVRV ratio has shown a tendency to sort of bottom out between like minus 20% and minus 25 to 30%. We have seen it here during the end of 2018 bearish sort of cycle, and then here as well at the May 23rd bottom right here. There we go, minus 28, minus 27%, I think. So this has suggested that overall we are quite low as far as historical MVRV is concerned, and that we might see short-term price recovery. So that's what has happened in the past couple of days in particular. And currently, Bitcoin's 30-day MVRV hovers at around, like I said, minus 3%. This is showing minus 6% because it's data aggregation on a larger scale. But overall, if you look at historical trends, we're definitely far away from sort of historical highs as far as Bitcoin's MVRV is concerned. Like here, 27, between like 28 and 40%. Has been a period where Bitcoin's 30-day MVRV tends to peak. Obviously, this is the outlier that is the peak of 2017 rally. But there's certainly a lot of room for Bitcoin's price to grow according to its MVRV ratio before we once again move back into that sort of overvalued territory. And then if we look at Bitcoin's 365-day MVRV ratio, which shows the average profit or loss of long-term MVRV, long-term Bitcoin holders, what we're going to see is a fairly similar story. So first of all, what we see is that Bitcoin's 365-day MVRV ratio has peaked at about plus 114%, very similar, by the way, to where it peaked in 2019. This was about plus 90%. But overall, currently it's around minus 1, minus 2%, suggesting that, first of all, it's the lowest it's been since essentially the start of the rally, suggesting that all addresses that have acquired Bitcoin in the last or previous 365 days are actually slightly underwater now. So they're below break even on their initial investment, which would suggest that they're probably not going to be just to think for yourself, would you sell your bags of Bitcoin if you were like down minus 1 or minus 2% in your initial investment, or would you hope for another price recovery to do well in your investment, right? So at the moment, Bitcoin's 365-day MVRV ratio is slightly underwater, so slightly undervalued. It's not as low as we have seen it go historically, but it's definitely no longer in this danger zone where it was during the January and February high. So we have seen some signs that short-term, at least, Bitcoin does have, from an on-chain perspective, from a fundamental perspective, it does have a possibility to recover. Another metric, I don't want to get into it too much, but another metric that we've often talked about is Bitcoin's exchange inflow, or the amount of Bitcoin that are moving to exchanges over time. So we have seen these massive capitulation spikes where Bitcoin has been massively moved to exchanges, presumably to sell, but the sell side pressure has been declining. There have been sort of a few capitulation spikes overall, but it seems like everybody that has wanted to sell has sort of sold. It seems like a lot of this sell side pressure possibly has already been absorbed in the market. So short-term wise, I wouldn't be completely surprised that we see a potential recovery in sort of the next couple of weeks. However, so it's not out of the question. However, some longer-term indicators remain relatively concerning, like the amount of on-chain activity declining across the board, not just for Bitcoin, but all coins, and also Bitcoin's mean dollar invested age, which suggests that we are at the tail end of a redistribution cycle for BTC. So that's sort of, Andrew, I think, where we can sort of end this discussion, as long as there aren't any questions that you guys want me to answer.
Cool. Thanks, Dino. Hey, so before we were looking at the on-chain activities, you had the three major coins up there. You had Bitcoin, Ethereum, and Litecoin. And it seemed like Litecoin was it really declining, or was that more of a flatlining?
Yeah, so
maybe
I think I mentioned, I think I mentioned there was a slight decline, but not as much as Bitcoin and Ethereum. So if you look at Litecoin, here we are. Let's look at its active addresses. So this was this was the Litecoin's active addresses. Let's take the last year of data. Yeah, so as you can see, Litecoin's active addresses have I think this is an outlier that kind of makes it seem like Litecoin's active addresses have on average been staying put or have not shown that much of a decline. But really, first of all, you can see this fairly significant uptick since the start of the rally, which is good. It shows a sustainable rise in the amount of demand towards LTC. Since the high here, we have seen a clear sort of decline in Litecoin's daily active addresses. If this proves to be not just an outlier, that's a different story, but I think we've already seen it. Yeah, we've seen it move back here into about 300,000. Now, it's not as sort of aggressive as Bitcoin. So we've gone from 400,000 to 416,000 addresses here to 316 addresses today, 1,000 addresses. So it's not that's what, about 25%, 23% drop. So it's not the craziest drop ever, but it does suggest sort of a short-term period of decline across the board. At the very least, you cannot say that it's been growing since the correction. There, we haven't seen sort of the same amount of interest in a lot of these coins compared to the middle of May, where all of the prices have been, sky high. It seems like, yes, a lot of speculation is still going on, but at least sort of a stretch of investors in Bitcoin, Ethereum, Litecoin, and all of the top caps have kind of moved on the sidelines, probably sold their bags, which also seems to be, like I said, it seems to tie in with what we're seeing on Bitcoin's mean dollar invested age chart. We're seeing a move away from redistribution and into, once again, dormancy. And this is what we're seeing on all of these active addresses charts as well, is we're seeing a period of high activity in May. And then since then, we are seeing lower and lower, daily address activity on these networks, suggesting a period of dormancy and the end of a redistribution cycle. It doesn't have to be, but these are the metrics that I would look at over the next couple of weeks to really kind of get a good sense of where we're going as far as the next couple of months and maybe a year as far as market prices are concerned.
Cool. Thanks for clearing that up, Dino.
Of course.
All right. Look, as usual, you've given us so much insight into what's actually happening, on chain, what's happening, with the sentiment, right, on social media. That's all been very, it's very insightful. Where, you're not gonna know what's actually happening without analyzing the data the way you have. So thanks for sharing that. I think you're expecting some people to come in. So let's actually end this on time this week.
Sure. Yeah, I don't know where they are. Luckily or thankfully, they have decided to be late, which one of the rare cases where that's actually good, and I'm not mad about it. But yeah, unless obviously, if there are any questions, feel free to either ask them now or ping me on our Friday streams. So tomorrow at 4 p.m. Central Eastern Time, we are going to be live on YouTube. So just type in Santiment, Santiment, on YouTube, and you'll find our YouTube channel. Subscribe to it. Be live tomorrow at 4 p.m. Central Eastern Time. So that's basically 1 hour from today. 1 hour from today, tomorrow, we're going to be talking live about the market, especially what's been happening in the last week, both Bitcoin, Ethereum, and then we take audience questions and we analyze coins that people want us to analyze. We've been getting a lot of questions about Matic recently, which makes sense. A lot of questions about Cardano, Polkadot, Solana. So, whatever people want us to analyze, we do some impromptu sort of look at some of the metrics during our weekly stream. So if that sounds interesting to you, yeah, see you tomorrow.
Yeah, I'm usually on. So 4 p.m. Central European time is 10 p.m. Here in Malaysia, Singapore. So it's 10 p.m. guys. Yeah, so it's I usually tune in. It's great. We've got Alex asking if it's a good time to buy now. So we don't give financial advice, but Dino.
Yeah, I mean, it's a very volatile market, like I said. So these are, I don't, it's first of all, it's very difficult to call bottoms and tops when the volatility is this high. I think a lot of people believe that Bitcoin is going to keep ranging for a while. That's the sort of prevailing sentiment among the analysts that I do trust, that we're going to see a period of consolidation for Bitcoin. What that's going to do to altcoins remains to be seen. I would not, personally, as long as activity on the network remains low and it continues to decline, I would be very cautious about moving large sums of money into the crypto market, because I'm just not seeing enough inflow of new blood and new money in as far as network activity is concerned, to justify like major price recoveries and price bounce back. So I would. One thing that is a little bit exciting or a little bit optimistic for Bitcoin, we haven't talked about it here, but I wrote about it in this report that you can find on Insights here, is Bitcoin whales. And we have seen over the last couple of weeks, we have finally seen the large addresses holding between 100 and 10,000 Bitcoin, so basically Bitcoin millionaire addresses. They finally started to grow their combined holdings once again. There's been a decline of about a month and a half in the total holdings of Bitcoin whale addresses. They've dropped their combined holdings by about 130,000 Bitcoin. So that's about $3.5 billion or something. Actually, even more, I think. In any way, there's been quite a bit of dumpage by large addresses between the all-time high and the bottom of May 23rd. However, since then, over the last maybe 3 or 4 weeks, we have seen that amount start to grow once again. Actually, I can check the charts. Where are you? Yeah, there we go. So from the all-time high here all the way down to the bottom, this has been a decline of about 130,000 Bitcoin. Even though, throughout the rally, they have accumulated. And then since the all-time high, there has been a sort of a period of offloading by these large addresses. However, in the past couple of weeks, we have seen it's not really been a sustained or like a clear directional move upward. It's been more ziggy-zaggy. However, on the whole, the trend seems to be upward. So the total holdings of these large addresses are once again starting to recover. So it's giving me hopeful signals, but it's not like super strong still. So I would hope to see these addresses continue to accumulate a bit more over the next week or so before I can really say, okay, whales are back. Whale accumulation is back on the menu, boys. So, like I said, it's quite a tumultuous time. As long as its on-chain activity remains low, I would be cautious about buying back into.
Cool. Thanks for that, Dino. Look, Alex, I think if you know Equities Tracker and you've been to any of our courses, so we talk a lot about managing your portfolio. So when we manage our portfolios, it really depends. First of all, how much exposure you want to have per coin, or your overall investments, and depending on the weightage, or how much percentage of exposure you want to have on that coin, then obviously you're going to be trading that coin in and out, right? And then you look at what your portfolio's average price is for Bitcoin. I mean, it can come down, down to 20,000, but if your average price is 2,000, you're still up 10x. So that's the other view, right? So so the thing is, the cool thing is, you combine all your knowledge of all these different metrics and techniques, right, and sort of make that judgment call on your portfolio. So thank you for the question, Dino. We were going to end it, but I think we've got more questions come in, so I'm just going to flash them, and we'll just do them quickly. So we have so it says, hi Dino, I heard you talking about Shiba Inu. Do you have any insights to share what happened to Shiba Inu after the price hit the highest on 10th of May? Thanks in advance.
Sure. So we are going to be writing or posting a very detailed article about Shiba Inu later today. But some of the metrics that I have seen, which kind of showcase exactly what happened with the price of Shiba Inu, is, first of all, when you look at the amount of mentions of Shiba Inu throughout the last couple of months, what you're seeing is that you're seeing this sort of period of very high excitement towards Shiba Inu. So social volume basically shows the amount of mentions of Shiba Inu on specifically cryptocurrency social media. So we're tracking 1,500 different channels that are only dedicated to cryptocurrencies, and we're tracking the amount of Shiba Inu mentions on those channels. So what you see here is that there's been a period of very high market euphoria towards Shiba Inu on a daily basis. This is a 4-hour interval, right around its all-time high, by the way. And this is something that we see very often, is that these massive spikes in social volume typically coincide with the incoming tops and local corrections, because the market is overvaluing the coin immensely. This is only showing the amount of mentions of Shiba Inu. If you actually look at the average mood of these mentions, or the average sentiment of these mentions of Shiba Inu, what you're going to see, let me zoom in here. You're going to see this massive bullish spike in sentiment towards Shiba Inu, first of all, during its April high, and then its all-time high. So once again, it suggested that the crowd is very much on board the Shiba Inu hype train. It was, in full force. People were expecting Shiba Inu to go to the moon, blah, blah, blah. And as such, these are markers of market greed. It's no surprise to me that we have seen a very clear rise, or very clear correction after these spikes in social mentions and social sentiment towards Shiba Inu. Another thing that I thought was quite interesting from an on-chain perspective is net profit loss. So, like I said a moment ago, as to not repeat myself, essentially these spikes in net profit loss are just period of massive profit taking on the Shiba Inu blockchain or network, and then these drop-offs suggest capitulation, or suggest periods in time where the average the coins that have moved on these at these points in time, on average, have been moved at significant loss relative to the point at which they were acquired. So throughout the rally, and especially at this local top here and then the all-time high, we have seen massive spikes in profit taking, suggesting that these were the periods, one, before this short-term correction, and then two, during the all-time high. These were the 2 points in time where most Shiba Inu holders decided to cash out and take massive profits. And then since then, there's just been a lot of people that have gotten burdened throughout this rally that have decided to sell at a loss. So we've seen, definitely a tale of two halves, the hype half and then the disillusion half, right, where people are now flooding out of this coin because they no longer believe in it. Now, as far as Shiba's on-chain activity is concerned, it's actually not all that bad. There's been a massive decline in the amount of addresses interacting with this meme coin since the all-time high. First of all, this is completely insane. There have been more than 100,000 addresses interact with Shiba Inu during its all-time high, price all-time high. That's massive. I think there's like 2 coins on Ethereum that have this kind of activity on the network, and one of it is like Tether. So it's completely ridiculous. And yes, obviously this was unsustainable, and it pointed to market being overzealous and greedy and whatnot. But even with this 90% drop-off down to about 10,000 addresses, 10,000 addresses is still a lot of daily activity. Like if you, there's a cool feature on our platform here called a screener, where you can play around and filter out different coins based on some of our metrics. So for example, one thing that I like to do is to put in context exactly how much 10,000 daily active addresses really is. One thing that I like to do is I like to look at, one sec, as this loads. So I'm looking at a screener here. This shows all of the assets that we have, and then you can filter it by a bunch of different metrics. So first of all, I'm going to filter all of the coins that don't live on Ethereum. So basically, I'm saying show me only the coins that live on Ethereum. So that number goes down from 1,900 assets to about 1,200 assets. So now we are only looking at coins that apply the ERC20 standard. And then you scroll down here to daily active addresses, and I can say, okay, show me only the coins that have had more than 10,000 daily active addresses in the last week on average. So only the addresses that only the coins that have had more than 10,000 daily active addresses in the last 7 days. This is the list. This is the entire list: Ethereum, Tether, USDC, and Shiba Inu. Now, I'm not exactly sure what is contributing to this amount of activity on the network. Honestly, I find it quite fascinating. I haven't really delved deep into what is, making so many addresses interact with it, whether this is really organic or if there's some bot activity. One of our other analysts is looking into it today. But overall, yeah, its on-chain activity is still very high. Like 100,000 is completely ridiculous, but 10,000 is still very, very impressive. And if we look at the amount of new addresses that are interacting with Shiba Inu on a daily basis, which is this metric, network growth, there's still about almost 4.5 thousand new addresses interacting with Shiba Inu on a daily basis. That's a lot. That's a lot of new blood interacting with this coin. So, I mean, yes, obviously the trend is down in a downward direction, and if it continues being in a downward direction, that's not great for Shiba Inu. But like zooming out and speaking in just absolutes, 10,000 addresses interacting with it daily, 5,000 new addresses almost being created to interact with it daily. That's good. That's good for the coin. Now, whether that is sustainable, I honestly don't think so, but I could be proven wrong. So, yeah, hope that that explains a little bit of what we're seeing with Shiba Inu. And we're going to have a sort of a longer overview of the coin later on today in our insight.
Cool. Thanks for that, Dino. And that's pretty insane, because all the ones with 10,000 or more interactions are all stable coins.
Still just stable coins and Ethereum. Yeah, just
and Ethereum. Yeah.
So like DAI is not on this list, right? So it's just to show you how ridiculous it is.
All right. So we've got a simple one here. Nicholas wants to know, what's your favorite coin?
Oh, I mean, in the past I was I still am a fan of Maker, MKR. I think it's a very as far as fundamentals are concerned, Maker is one of the most fundamentally sound projects in my opinion. Obviously, you can make the cases for a lot of different coins, but from a community perspective, from a development perspective, from an on-chain perspective, I think Maker is and just from a utility perspective, I think Maker has been very good, and I've been touting it ever since I think it was around $400. I don't know. I ought to be completely transparent. I haven't really looked at Maker in the last month or so as far as its on-chain and the price activity. So I'm not saying buy it now because I have no idea what its fundamentals are looking like. It could be done with its rally. I have no idea. But from a fundamental perspective, like from a utility perspective, I think Maker is great. Matic has been making some waves in the market. Polygon or Matic, right? It's now sort of the de facto layer 2 solution. I think, a few months ago you could say, okay, well, Matic or Loopring, LRC, those were the two coins that were kind of vying for dominance as far as who's going to be the most popular layer 2 solution. I think Matic has won. Whether it remains this active, and whether its community remains this active remains to be seen. But it's definitely been making some waves. So those two coins, I think, as far as Ethereum is concerned, are probably coins to watch if you like fundamentals. I think those two are pretty good.
Cool. So my favorite. So I've got two favorite coins that I look. Obviously, Bitcoin's always gonna be there, but I like so for transfer of value. Whenever I need to pay someone money, or I like to use Litecoin because I think you could. It is one of the oldest coins there are, which means it's survived for a really long time, and it's just faster, it's cheaper, it's just pretty good fundamentals. I mean, you could see, there's growing, from the on-chain analysis that daily active addresses were growing. I mean, it was this slow and steady growth, so it wasn't hype, like it wasn't. It's come down a little bit, but it's also still one of the most secure. After the other proof of work coins, it's still one of the most secure ones if you don't want to send Bitcoin, because Bitcoin's going to take you an hour to verify, to have 6-block confirmations. But on Litecoin, it's pretty quick and it's cheap to send. So that's for transfer of value. My other favorite coin is Ren. In fact, I think Dino likes Ren as well.
I do, yeah, I do. Especially in 2020, 2021, it's kind of been a bit lackluster as far as innovation is concerned and new features. Obviously, 2020 was a very big year for Ren because of the mainnet launch and dark nodes and all of that. But I think it's still quite a strong coin. As far as like alternatives to wrapped BTC, I think our BTC remains like the biggest competitor, right?
Yeah, it does. Yeah, it is. And so the cool thing about Ren is there's actually very little hype. They don't market their coins at all. They don't. There's no hype. In fact, most people don't know about Ren because there's no hype. But they just keep building. And in fact, in the last month, they're going through. They went through this blockchain blitz where they wanted to integrate more and more blockchains onto the Ren network, right? And so now you have Ethereum, you've got Binance Smart Chain, you have Phantom, you have Matic's on there as well, and a few more. So if you go to bridge.renproject.io, you'll see how many blockchains that they've linked up. Now, for those of you who don't understand, blockchains, each layer 1 blockchain, they can't talk to each other. So Ren builds these bridges between these blockchains so that they can talk to each other. And if you're a bit more technical, it's like TCP/IP, right? Ren is like the TCP/IP. It allows you to talk to each other, right? It allows the different blockchains to talk to each other. So that's my favorite one. The two favorite ones.
I mean, Ren is definitely, as far as DeFi is concerned, Ren is a very interesting project, right? Because a lot of Bitcoin holders, I don't know how true that is at the moment, but it's been true in late 2020 and early 2021. A lot of Bitcoin holders, Bitcoin bulls in particular, right? They wanted to do something more with their BTC, and you can't really put BTC into DeFi because there's no DeFi in Bitcoin. So in order to use your BTC in the Ethereum-based DeFi protocols, you need to wrap it in something so that it can interact with Ethereum network. So obviously, wrapped BTC is the sort of dominant solution, but there are problems with wrapped BTC. The main problem is that you need KYC. It's a centralized solution. So our BTC, Ren BTC, is a decentralized answer to wrapping Bitcoin so that it can be used on Ethereum for whatever purpose, swapping, DeFi, whatever you want to use it for. So, I mean, it's a battle between the several different protocols or sort of wrapped Bitcoin solutions between WBTC, RBTC, I think TBTC. But yeah, as far as interoperability protocols, Ren is one of the most interesting ones.
Yeah, yeah. And okay, so Nicholas has another question. Look, there's probably another one, two, three more questions, or two more questions, and then we'll wrap it up. So Nicholas says, what would be the impact of inflation on Bitcoin? Not really sure what you mean there.
But does he mean just the new sort of amount, the new supply that's being added to Bitcoin, or just
Yeah,
the impact of U.S. inflation? Or because I mean, in
yeah,
general, if we're talking about inflation of U.S. dollar, um, Bitcoin has been touted as a hedge against inflation. For it's been one of the primary use cases for a lot of U.S. Hedge funds. That the reason why I think MicroStrategy has also expressed interest in Bitcoin and why they are moving another 500 million, or actually raising another 500 million to buy Bitcoin even at these prices, is because they believe that it's a great hedge against inflation. And there are some inflation risks. So, I mean, I'm not like super versed in the current state of the U.S. economy, but from what I'm reading, there's the inflation sort of expectation index or whatever it's called. It's been growing quite steadily. So people are expecting higher inflation this year, which some Bitcoin analysts believe is actually positive for BTC because that's going to make them scared of keeping their money in US dollar because it's going to lose its purchasing value and purchasing power, and as a result, some of that money might trickle down into crypto. So we'll have to wait and see whether that's the case. But in general, as far as the dollar inflation is concerned and its correlation with Bitcoin, most analysts believe that the inflation is one of the biggest sort of use cases or the biggest proponents for Bitcoin is because you can use it as a hedge against that dollar inflation, right?
yeah, yeah. Look, I fully agree. The thing is, the Federal Reserve, the ECB, the European Central Bank, they've all turned on the taps, right? To print more money, to do
Yep.
QE, right? QE is just another fancy word of
Yeah,
diluting
quantitative easing.
the money supply, and so what happens is when you flood the financial system with too much money, the biggest winners are those who are holding assets and not cash. So when you're holding assets and a deluge of money floods the system, everything still costs the same. It's just that it costs more in terms of dollars or it costs more in terms of euros because there's just more money in the system, right? So in fact, you feel like so you're getting richer. So in fact, if you hold assets, then because of inflation, you're going to be better off. In fact, from last year when they turned on the taps to now, I think there was an article today about 500 people own $8.4 trillion in the world. Now, just think about that.
Yeah.
500 people, $8.4 trillion. And it was all thanks to the flooding of money into the financial systems because they all held assets. The assets are inflated in terms of prices. They become richer. So the rich became richer. So in terms of Bitcoin, well, Bitcoin is a very scarce, even more scarce than gold, because you cannot produce more than 21 million. If you're holding an asset, I think you're going to be better off generally compared to holding cash. Okay, thank you for that question. Look, we've got a couple more. I'll just flash them one after another, and then that's it, right? So we've got Jonathan wanting to know what's the current sentiment of XRP, and
It's
another
negative.
negative.
The short term is it's negative. I can actually show you.
Okay.
Yeah, I mean, I wrote about Ripple maybe a week and a half ago. There's been some hype around the news that the SEC has kind of received a blow in a legal case against the Ripple because, long story short, they wanted to sort of make public the transcripts or conversation between Ripple Labs and their lawyers during 2003 to kind of show that the Ripple has known that XRP might be a security ahead of time. However, the judge sided with the fact that that would be falling under attorney-client privilege, and as such, it's kind of been a very there's been quite a big blow to the strategy that SEC wanted to employ against Ripple in that case. So it's been, after that news, the Ripple has pumped to about $1 in like 24 to 48 hours time, but it's been struggling to break above that line. $1 is a very strong resistance point. It broke it shortly here before a correction, but overall, you can see this is what Ripple's sentiment is looking like. So massive spikes in sentiment around the tops, which is something that we usually see, suggesting overvalued conditions, euphoria towards a coin, which is usually not a great idea, not a great sign. Currently, it's quite negative. I mean, currently, I think a lot of people are undervaluing Ripple or believing that Ripple, like the rest of the market, is going to be headed down the drain. So, like I said at the beginning of the call, on average, or at least according to some of our backtests, low or bearish sentiment is not necessarily a bad sign for the coin. It suggests that the people are undervaluing it, and if its fundamentals are sound, that it might be undervalued in the short term. It might suggest a potential, not a guarantee, but a potential of price recovery in the short. So yeah, the fact that people are bearish on Ripple isn't a bad thing.
Thank you. Thanks for that, Dino. All right, this is the last question, and then we're signing off. How will upcoming ETH upgrades in July impact its future price in the short term?
ETH 1559 is going to be a massive deal. I think some people thought that it's already being priced in. If we look at Ethereum, once it started recovering fairly quickly, they thought that it's ETH 1559 sort of being priced into the rally, priced into the price action of Ethereum. The people that I talk about, that I talk with about Ethereum, they think that ETH 1559 is going to be buy the rumor, sell the news type of event. I tend to believe that that's the likeliest scenario. You can never know ahead of time, but previously, if you look at, for example, Bitcoin halvening, there was a period of price rise before the halvening, and then as the halvening happened on May 12th, there was like a month of nothingness, of just a very tight range for BTC. So
it was a non-event, yeah.
Absolute non-event. So as far as these sort of rumors, sometimes, or sort of upcoming events, sometimes it's the anticipation of an event that actually leads to more price rise than the actual event. When the event happens, it usually sort of makes for an offloading event for a lot of whales and a lot of investors fearing further correction. So buy the rumor, sell the news seems to be the most likely scenario, at least according to some of the people that I talk to. I'm kind of torn because it's not just the ETH 1559 that's sort of on the menu, on the roadmap. We've got a lot of different scaling solutions that are, becoming more and more, product ready. We've got obviously another sort of phase of Ethereum 2.0, which might be about a year before we really get into it. But there are other sort of milestones on the horizon that people think are going to be bullish for Ethereum. So in the short term, short answer, I think buying the rumor, sell the news seems to be the prevailing sentiment as far as what's going to happen with the price of Ethereum.
Cool. Thank you for that, Dino. Look, for me, whilst the EIP 1559 is going to be an upgrade. Every time you do a systems upgrade, there's always that risk of the upgrade not working. So obviously in the past, whatever upgrades they've done have worked. So I guess, and once the upgrade's been done, whether or not there's a bug somewhere that they find out later. So I'll wait and see. for me, it's a wait and see. And this is not financial advice. Okay, so look, it's we've gone more than half an hour. We've gone about half an hour over. So thank you everyone for joining us. Thank you for tuning in. Tune in to Future Proof every Thursday night, and we will end it here tonight. I'll wait for. All right, so Dino's probably got someone who needs to. He needs to open
sorry,
the door
it's the
for.
handyman. So they
All right.
finally, they told me that it's gonna be a couple of hours before they're here. So yeah.
Okay. So look, thank you everyone for joining us, and thank you so much, Dino, for spending time with us.
Of course.
I'll let you. Any last words, Dino?
Yeah, check out app.santiment.net. Everything that I talked about today is available on our platform, not just for Bitcoin, but for about 1,000 different other coins. So if you're one of the people that is sort of investing, looking for value investing and looking for sort of hidden gems, I think our platform is the best around. It's just $49 a month, and if you go to our the weekly streams, there's a discount code for people that watch our weekly streams for 25% off your first billing cycle. So if you're interested in even getting a discount at for our plans for our product, check out the stream tomorrow at 4 p.m. Central Eastern Time, and talk crypto with us.
Yeah, look, Santiment.net is definitely one of the best platforms if you're serious about looking at on-chain metrics, social metrics, sentiment analysis. It's definitely the one that I use, and don't go in blind. Do your research before you take any action. So definitely one of the best out there, and I use it personally. All right, thank you, Dino, and thank you everyone for tuning in. Have a great afternoon, evening, and we'll see you next week. Thank you.
Thanks, Andrew. Thanks, everyone.
Thank you. Bye-bye.
Bye, guys.